Pivot points are another classic trading indicator. They're used to identify key support and resistance levels. But can you actually trade just using pivot points? There's a lot of videos on YouTube of people making money with pivot points. In this video, I'm going to backtest a few different strategy rules and see the results for myself. Let's start by adding the pivot points indicator to TradingView. So if you search for pivot point, you'll get a few different ones. The one we need is pivot point standard. That's going to give you a whole bunch of different lines, and it looks quite messy and confusing to begin with. So head back up here and go into the settings. Down the bottom, there's all the different pivot points. TradingView gives you quite a lot of them, but we're not going to need them all. So turn off S4, S5, R4, and R5. I then like to configure the colors. So for the main pivot point, I change it to white, and then the S, which are the supports, and R, which are the resistances, I just use different shades of pink and green as they increase. So you should have something like this when you're done. Change the line width to 2 just to thicken it up a little bit. And then this bit up here is important, the pivot time frame. You want to set this to daily. That means that today's pivots are going to be calculated based on yesterday's price data. Then for the label position, I'm going to set them from left to right. So that's these markers up here. When I change it to right, you'll see that they all jump over to the other side of the pivot. And lastly, I don't need to see the prices of the pivots. So I'm going to untick this show prices box. And now I just have the different pivot lines. Click OK, and that is the pivots configured. So what are they and how do they actually work? I've zoomed in a little bit to make it clearer. Everything begins with this pivot line in the middle, this white line with a letter P next to it. This is calculated based on yesterday's high, low, and close prices. From this pivot, the others are then calculated. Above the main pivot line, we've got different resistance lines, R1, R2, and R3. And then the same happens in the other direction. We've got S1, S2, and S3 for the 3 support lines. So you can see why I turned off S4 and 5. Generally, they're just too far away from the price to really be useful most of the time. And you can see that these pivots update every day because in my settings, I've chosen the daily time frame for my pivots. But you can choose something else. We can make it weekly, and that way it calculates the pivots based on previous week's prices, and then it uses those pivots throughout the rest of the next week. But for this strategy, I'm just going to stick with daily for the time being. The main strength of this indicator comes from the fact that they are the same for everybody that's looking at this chart. Normally, if you try to draw your own support and resistance lines, they can differ from trader to trader. But these pivot points are calculated based on the price action of the day before. So they look the same for everyone. And the idea is that the more people that see the same lines, the more likely the price is to respect them. And if I zoom in a little bit, you can actually see many instances where price has respected these different levels. But of course, there are many times where it hasn't, and it's just broken straight through them. But if the levels are respected often enough, then it may still be possible to create a profitable trading strategy from this. So now let's talk about the actual trading rules. This can be traded in 2 different ways, as a breakout strategy and as a reversal strategy. For breakouts, we're looking for price to be moving above the pivot line P, and from reversals, we're looking for price to go below the pivot line towards the supports. I then wait for price to break through the first resistance line, R1, and close above it, which happens on this green candle here. That gives me confirmation and I enter a long trade. The stop loss is then placed at the pivot below, and the take profit is the resistance line above, R2. So this was a successful trade and it quickly went on to make a profit. Here is another example. Price is above the pivot point and it's heading towards R1, the first resistance line. It does break through it here, but I'm waiting for price to close above it, which happens in one of these candles here. So that's the entry point. And again, the stop loss is at the pivot and the take profit is at the next resistance, R2. Now let's take a look at a reversal trade. This time I'm looking for price action to be below the pivot point, and it needs to hit and close below the S1 support line. So that happens on this candle here. The candle breaks through and closes below the support line. So this is where I open the long trade. I place my stop loss at the next level down, which is S2, and I place my take profit at the line above, which is the pivot line. and this trade quickly goes on to hit that target. So to recap, all of the breakouts are taken at R1, and all of the reversals are taken at S1. Then the stop loss and take profit are set to one pivot either side. So let's say we get a breakout trade through R1, that means that the take profit will be the next pivot point above it, R2, and the stop loss will be the pivot point below it, which is just the original line P. So now with the strategy rules explained, I'm going to get into the backtest. And first I'm going to test just breakouts. So I'm going to be looking at a break of R1, a stop loss at P, and a take profit at R2. I'll optimize these parameters later, but for now we'll just start with the base strategy. I'm going to do this backtest in Python as usual, and I'll walk you through how I set up the strategy parameters so that you can replicate this or even modify it yourself. Even if you're not familiar with coding, understanding the logic of the backtest will help you follow the tweaks that I make to the strategy. I begin by importing my libraries, and then I define a few of the testing parameters. This is going to be done with hourly data on the SPY. I will just test the breakout strategy for now, and then I'll move on to the reversal later on, starting with 10,000 as the starting balance and risking 2% per trade. I've defined the different pivot levels here. So we go from S3, S2, S1, the 3 support levels, our pivot point in the middle, and then the 3 resistance levels above it. And then I define the pivots for my breakout and my reversal. So breakout at pivot 4 means that in this list, starting from 0, it's 0, 1, 2, 3, 4. So breakouts are taken at R1, like I mentioned in the strategy. Reversals are going to be taken at S1, which is 0, 1, 2. So that's what these two variables here mean. I then have a function to load in my data from a CSV file. If you want to test this on something other than SPY, then you can just load in your own data and update the file names. I then calculate the inputs for my strategy. So this is where I actually work out all of those pivot points, the different R and S levels. And then using that, I can generate my signals. So this is kind of the important bit. I have two different entry conditions. Condition C1 is when the open is below the R1 pivot, and then the close is above the R1 pivot. This is for my breakouts. Condition 2 is for reversals. So it kind of does the opposite. The open has to start above the S1 support level, and then it has to close below that S1 support level. For the breakout strategy, I'm using the C1 condition. And for the reversal strategy, I'm using the C2 condition. And then I generate my exits, which are the stop loss and take profits. For now, these are just going to be one pivot either side of the entry. The take profit will be the pivot above, and the stop loss will be the pivot below. The rest of the code is my backtest, so we can just run everything now and then go down to see what the results are for this strategy. So the default rules of entering an R1 and then putting a stop and a take profit either side doesn't seem to work very well at all. That's a little bit disappointing, but now I can tweak my stop loss and my take profit to different levels. If we go back onto the trading view chart, I'm still always going to take long entries at the break of the R1 pivot, but I can be flexible with where I place my take profit and stop loss. So what I'd like to test now is all the different scenarios, whether I put my take profit at R2 or R3, and whether I put my stop loss at S1, S2, and then further down below at S3. To do that test, I just scroll up a little bit to this block of code. This is the part that actually runs the backtest function, and it passes in the resistance and support levels. By default, I'm passing in a number of 1 to both of these. And what that means is I'm looking for one pivot either way of the entry. Those levels are defined up here in these variables, my resistance levels and my support levels. Right now they're set to test just a value of 1, but I can expand this range to test a whole bunch of them at the same time. So if I enter a R1, there are 2 resistance levels above it, and there are 4 support levels below it. That means that within my range for resistance levels, I will change the second number to a 3. It's not inclusive, so this will only do numbers 1 and 2. It will stop before it runs 3. For my support levels, I will do 1 through to 5, because again, it's not inclusive, so it will do 1, 2, 3, and 4. Now I can run this again, and I'm going to get a whole bunch of different lines for all of those different parameters. Right away, I'm seeing this yellow line that's performed a lot better than all the others. So if I scroll down, this legend will show me that that happens at support level S3 and resistance at R3. So back on the chart, that means entering the position at R1, setting a take profit up here at R3, and then setting a stop loss down here at S3. So I'm going to get rid of all these other lines now, and I'm just going to keep the parameters that performed well. So I go back into my range, and now I'm going to set my resistance level to the highest one, which was a 2, and my support level to the lowest, which was a 4. These numbers might get a little bit confusing, but remember, you're just counting the number of pivots from the entry. So the resistance is 2 pivots up from the entry. The entry is at R1, 2 pivots up is R3. And then the support is 4 pivots down from the entry. The entry is here. So 1, 2, 3, 4, that brings us to S3. So that's how those numbers correlate back into these different levels. If I run this test now just with those optimized parameters, I get a pretty nice looking equity curve, much better than the one before. We can take a deep dive into the metrics here as well. So the annual return is 14%, which is okay, a little bit on the low side. Max drawdown is only 5% though. So trading this with a small amount of leverage could boost these annual returns while still keeping the downside to an acceptable level. The win rate is really good, 79%, but the average risk to reward is only 0.44, which makes sense because the stop is so much further away from the entry than the take profit. This gives me the results for the breakout strategy. Now I'm going to do the same thing, but I'm going to change this to a reversal instead. And straight away, I'm just going to test the full range of stops and take profits. The reversal strategy definitely looks a bit choppier, but the parameters that come out ahead are on this red line here. So the red line is a support of S3, which is actually the same one as for the breakout. So it seems that putting the stop loss at S3 works best for both of them. The take profit is at R1, which is the entry for a breakout trade. So back on the charts, if I remove all these drawings, the entry is going to be at S1, stop loss at S3, and take profit at R1. And this is my equity chart. It's definitely a bit more choppy than the breakout strategy, but it does still move upwards and it seems to generate a decent return. Now I can finally run both the breakout and the reversal strategies together, and we can see them with their best parameters on this chart. The brown line is the breakout. That's the one that gives us a smoother equity curve, even though it doesn't go quite as high as the reversal. The reversal does produce better returns, but it's a bit choppier. And down here we can see their metrics side by side. The two strategies are actually quite different. The reversal has a smaller win rate but bigger returns, while the breakout has more consistent win rate but smaller wins each time. Individually, both strategies seem to do well, but I think they could be combined and actually traded together. This would increase the overall number of trades, which should lead to even better returns. Now that I've completed my backtest, here's a recap of the best parameters. I use daily pivot points based on yesterday's price data, and I only use the first 3 support and resistance levels. There are 2 strategies, a breakout and a reversal. The breakout is always taken at R1, and the reversal is always taken at S1. For a breakout trade, price must go through R1 and close above it. So this here wouldn't be a valid trade. I would enter the trade somewhere around here where one of these candles breaks through and then closes above R1. When that candle closes, I go long at the open of the next candle. My stop loss is set all the way down at S3, which is the lowermost support line. The take profit is set at R3, which is the topmost resistance line. So you enter at R1, and then the stop and the take profit are at 2 furthest away pivot points. The reversal strategy is very similar, but in the opposite direction. This time I'm waiting for a break through the support line S1. I'm waiting for a candle to break through and then close below it. I then go into a long trade at the open of the next candle around here. The stop loss again is at S3. So for both breakout and reversal, I'm using pivot point S3 as the stop. The target for a reversal is R1. I also think the entries could be further optimized by combining the pivot points with other indicators. For example, RSI might be useful with the reversal strategy to identify oversold levels, or a moving average to make sure that you're always trading in the direction of the trend. There are a lot of ways to continue optimizing the strategy. I want to know your ideas on how this could be improved further. Leave your suggestions in the comments below. If you enjoyed the video and you want to see more backtests like this one, then make sure to hit the like button and subscribe for more videos.